I see people all the time buying scratch tickets, and the odds are very much against them winning in that situation. So I thought, let's find some simple options trades where you're taking some money, you're risking some money, but the odds are very much in your favor. Now, you're not going to win every time, but the odds are much more in your favor, and it makes for a much better way to risk some money than a scratch trade. So I came up with some ideas, and let's get started. Okay, so when we look at an option screen, we can look at the delta of an option, and one of the definitions for delta is the percent chance of an option finishing in the money. So if you have an option that you're selling that has a 30 delta, that means that there is a 70% chance that that option is going to end up not being in the money. Thus, if you sell an option with a 30 delta, the odds are in your favor by 70% that you're going to win on that sale. I've thought to myself several times before I knew about options, oh, you know what? I'd love to go to the casino and just take $500 and play roulette and pick one of the two colors, and my odds are just slightly less than 50-50, because remember, with the roulette, there is that one slot that's neither black or red that gets the odds away from 50-50. But basically, roulette's almost a 50-50 chance, and I've thought before, I'm just going to take $500, put it on the black or the red color, and I'll either double my money or I'll lose it. And I was willing to do that trade. Well, what if we can craft something in options where it's a similar situation, except the odds are in your favor, and you say, I'm going to take 2 weeks, I'm going to take $1,000, and I'm either going to come close to doubling my money, or I'm going to lose it, and I'm going to put the odds in my favor, and let's do it. All right, so the way we could do that, the way we could kind of do that with an options trade is we could sell an out-of-the-money call or put spread and, name your stock. So, for example, I was looking at Apple here. Okay, Apple's trading 170. And if I look at the Feb 22 options, that's 15 days away, so about 2 weeks away. So if we were to pick maybe the Feb 67 put, 67.5 put, I'm showing a 34 delta here. So that's about 66% in your favor. If you sell that there's a 66% chance, according to the pricing right here, that option will finish worthless. So if you sell it, you will collect the money for it. Now, instead of just selling a straight out option where, it's one thing to say, okay, well, there's a 65% chance that you're going to win on this trade, but you want to know, well, if I don't win, how much am I going to lose, right? You don't want it to be like, well, there's a 70% chance of winning, but if I win, I win $1, but if I lose $5,000. That would kind of switch things a lot in the equation. So what we want to do is we want to limit our risk here. So what we'll do is we will sell, instead of selling a naked option, we will sell a put spread or a call spread that is selling one strike and buying another, so that we have a defined risk trade. We know exactly how much we can make, exactly how much we can lose. So if I start by selling a Feb 167.5 put, and what I'm going to cue that up on my screen here, and I'm going to find this put, and I'm going to click my left mouse button with Thinkorswim, and it will bring up the screen to sell one of these puts. Then I'm going to go back, and I'm going to pick a lower strike to buy against this to protect myself in the event that it doesn't work out for me. I want to limit my risk. So maybe I will pick $5 strike lower. So from the 167.5 to the 162.5 strike, hold down the control button, press on the offer of this put. So I'm going to buy one put and sell the other one against it. So I have this spread queued up, the 167.5, 162.5 put spread, selling it for $1.22. Now when it says $1.22, that means $122. Now if I click on the confirm screen, I can see what this trade is all about. So when I look on the confirm screen here, and let me move slightly out of the way so you can see this a little bit better. You can see that I'm basically betting. It says max profit 122. So when I sell it for 122, I can make 122. Max loss 378. So I'm betting 378. That's how much I could potentially lose, but if I win, I make 122 bucks. So I'm betting 378 to win 122. It sounds like I'm betting more. I could possibly lose more than I could possibly gain, but that is going to be the case most times when you have a trade that's highly in your favor probability-wise. That's the way it works out. Now, people are tempted to do the trades where your maximum profit is way bigger than your potential maximum loss, but those trades usually have the odds completely against you. So in this case, you're putting up 400 bucks just about to make a little over 100 bucks. So it's almost a 4-to-1, but the odds are heavily in your favor. So if you had 400 bucks sitting around, you put it somewhere for 2 weeks, and the chances that you're going to make another 100 bucks off it could be a good do. It's really up to you what you think that is worth. It's 25% profit, a little bit more than 25% profit in 2 weeks, which annualizes a huge return. Now, there is some risk, of course. So every time I put this trade on, I would have to have about $400 in my account. Actually, it says buying power pack 380. So for every $380 in my account, I can do this trade one time. Now, I wouldn't want to put all my eggs in one basket. So maybe, if I have a smaller account, maybe I'll just do one of these trades. I'll put one of these spreads on. So I'll sell this one time, and then I'll go to another stock and say, boom, maybe instead of selling a put spread, I'll sell a call spread somewhere else. Now, I would suggest to you that doing a trade like this, you kind of want to commit to it. So put the trade on, come back in 2 weeks at expiration and see what happened. That might be one way of doing it, as opposed to kind of micromanaging it and panicking. If Apple's trading 170 now, if we sold the 167 put, that if we want to look at our break-even points, well, Apple has to be above 167.5 on expiration for our maximum profit. If we sold this for 120, then our break-even point would be 167.5 minus 120, right? So that would be 166.30 would be our break-even point. But if you're doing one of these trades, one of the best things to do, in my opinion, if you're going to commit to this type of situation, would be to put the trade on and leave it to expiration and forget it. Either you make the money or you lose it, period. Or at least wait till expiration day to massage out of it. Now, you could craft, if you say, well, I think that 65% odds in my favor is that's not good enough. I want 80% chance of probability. You could craft a different trade. You could find an option to sell that is a 20 delta. That means that the odds are 80% in your favor. So, for example, in this case, we could pick one that it has a different delta. Like, for example, 17 delta, if you sold the 162.5 put, and then maybe bought the 157.5 against it. Now, this one, each time you're collecting $49, but you have to put up $450 for the chance to win 49. So you have to put up more money. You get less in return, but the odds are more in your favor. And when you kind of play around with this a little bit, you'll see how that kind of dynamic works. But this is a way to, instead of going to a gas station and giving somebody else the odds of winning to a huge extent, just on the hopes that maybe someday it'll come through for you, this is a better shot. Now, I understand scratch ticket people that, you win sometimes, but if winning sometimes doesn't mean it's a good deal. If you have a 65% chance of winning on those, you spend $100, you're going to get $65 back of those over time. And maybe as you lose, and then you have a big win sometime. But the more you play, the closer your odds are going to come to the average, to the expected return. So I would, if that's the kind of thing that thrills you, I would consider checking out an options trade where you're putting the odds in your favor and you're doing something that's economically rational instead of the economically irrational thing of buying scratch tickets. Any questions about this sort of trade and this sort of thing, please feel free to reach out to me. Thanks for watching today. I'll see you in the next one.